All right, folks, welcome to the Wise Wolf Gold and Crypto Show. First podcast of the new year. We're getting all the technical stuff worked out. It's going to be an interesting year, ladies and gentlemen. It's kind of weird. You've been a gold bug for years and years and been buying Bitcoin since it was $380 in 2016. Just going over some of the numbers here in pre-show, just looking at the price predictions of what's happening to the fiat currency system. I'm a long way from telling people to end the Fed, and they look at me and ask, "You mean the federal government?" I'm like, "Well, that too, but no, in the Fed." We'll talk a little bit about the Federal Reserve today. Well, I'm in studio with Beans the Brave. It is the 8th of January, 2024. I'm in North Texas at my Denison, Texas location, and it is pouring rain outside. So you may get a little background noise from the rain hitting the roof, but we'll survive. And I want to jump into we're going to cover both gold and crypto today. And when I say crypto, I mean have some headlines that cover the periphery of pretty much everything in at least in the live show. And what I have planned for this year in 2024, we're going to do the live show here 11 a.m. Central Time on Mondays. You get the live Wise Wolf Gold and Crypto show. You can put in the comments on the Rockfin channel, YouTube, pretty much anywhere I can see them. If you want to chime in, I'll take a look at that. And then we've got interviews lined up and the podcast channel, the RSS feed. You're going to want to go subscribe to that anywhere podcasts are found. And if one of the things I'm changing up this year too is if I do an interview, if I'm on another show, I try to zip that audio too and put it up on the channel. So, whatever because a lot of times, even in an interview, I'll think about something that I don't think about in the live show. You guys can understand that. All right. Well, 2023 was a massive year for gold. And I think we've seen that in the record gold price. Gold broke its all-time high. Shattered it actually here in the last quarter of 2023. But I talked about all year the central banks buying gold. That's what I wanted everybody to pay attention to. That was the shift. And again, there's not just central banks buying because individuals are buying. That's way up over any other previous year. But we have massive central bank gold buying, and there's a reason for that. That because what's coming, and I think you can see this too, just watching the decline in the use of the dollar, what's called money velocity, the decline in percentages of transactions, financial transactions around the world done in dollars. In 2001, it was 75%. In 2023, it was down to 45%. And that is declining every single month because, again, you have things like the BRICS nations, Brazil, Russia, India, China, South Africa, covers 40% of the world's population. They're about a third of the world's economies and growing. They're looking to dump the dollar. They want an alternative system. I pulled up an article today we'll talk about as well from LewRockwell.com on a Russian economist who's looking at the gold ruble. And they had some interesting things to say, just kind of based off of what happened after the sanctions on Russia. That was a big part of the de-dollarization that has gone on in the last 24 months. Because the United States overstretched. We overextended our sanctions. We have 40 sanctions in 36 different countries, probably more now. That's a stat that I read 8 months ago, so I'm sure it's more now. And those are the factors, some of the factors at least in the declining use of the dollar, which is going to be the death knell for the dollar as the world's reserve currency status. So let's put this up on the screen. There's 3 factors driving gold bulls in 2024. This is Michael Maharrey. Let me put this on the screen for you. This is, I think it was a very sound argument for why you should be bullish on gold. Again, I'm not giving you investment advice because I'm bullish on gold and silver and Bitcoin. Mainly because I know what's behind the dollar. It doesn't take that much to get bullish. Once you realize that you have a free-floating, corrupt currency that is run by nefarious morons And I say nefarious morons is about I mean, that's nice. You know, I've got worse descriptions that I can. It's a family show, but you guys get it, right? This isn't going to end well. So let's dive into the three factors driving gold bulls in 2024. Again, Mike Maharrey, Money Metals. He just moved over to Money Metals from Shift Gold. So there are three factors driving gold bulls as we move into the new year: the demand factor, the Fed factor, and the January factor. Gold just wrapped up its best year since 2020 with a 13% gain, and the yellow metal now has new records in its crosshairs as we move into 2024. Gold faced significant headwinds throughout most of 2023 with dollar strength and higher interest rate environments. But as the markets began to anticipate an end to the Federal Reserve's inflation fight, gold rallied during the fourth quarter. Yeah, how do you like that? You know, we've been talking about this. They're eventually going to have to do something. You know, Jerome Powell's going to have to move the interest rates down. The economy's begging for that cheap fiat debt, and they need it to prop up their casino stock market. And it's an election year, so lo and behold, I can't believe it. Shock to the system. They're going to lower rates 3 times. Now they kind of backed off on, you know, a lot of this is just language that they use. These are insider deals. They put the thing out there, then they'll do a qualifier. They'll have another Fed spokesperson say something the opposite. It's to keep you guessing. You know, these are all like little intricate games that they play. Gold surged to a new record high in early December, topping out at just over $21.25 an ounce. It couldn't sustain those highs, but it has since built strong support at $2,000 an ounce, creating a foundation for gold to test new highs in the coming year. Let's look at the demand factor. Saxo's Bank Ole Hansen told Reuters he sees 3 significant demand factors boosting gold as we move into the new year. Following on from a surprisingly robust performance in 2023, we see further price gains in 2024, driven by a trifecta of momentum chasing hedge funds, central banks continuing to buy physical gold at a firm pace, and not least renewed demand from ETF investors. Well, it's ETF investors, you know, that's again, he puts it last because there's a lot of inside investigation that's gone on. It's like we really don't know the full extent of the actual bullion held by these ETFs. I mean, I think that's where the price gets bogged down a lot. Matter of fact, I've got a guest coming on the show. We'll most likely do a podcast. It won't be live, but they've written a book on that, and I want to dive into that this year for sure. Looking a little deeper at Hansen's trifecta, we can start with central banks. Globally, central banks gobbled up gold last year, and there is no reason to think their appetite will decrease. Through the first 3 quarters of 2023, central banks bought a net of 800 tons of gold. That was a 14% more through the same period in 2022, which is a record year back to 1950. I will say this too while I'm reading the article. Remember that there's only one central bank not buying gold. There's only one major central bank, and that is the Federal Reserve Bank. While central bank gold buying was robust, ETF investing was tepid, with metal flowing out of gold-backed ETFs through most of 2023. But outflows slowed significantly in November, with North Americans ETFs charting gold inflows for the first time in 5 months. With the price of gold rallying, we see more gold flowing into ETFs in the coming months, boosting overall global gold demand. As Hansen alluded, the price rally coupled with the anticipation of lower interest rate environment could also pull some of the institutional investors back into gold. Overall, the demand dynamics for gold seem to be on the plus side. Then he talks about the Fed factor. By far, the biggest factor driving the precious metals markets is the Federal Reserve monetary policy. You know, and because, again, this is, you know, the world's reserve currency, that's why the Fed plays such a big factor globally in the price of metals. I mean, that will diminish over time as the world resets. You're going to see a a revaluation of all currencies. And that's what, again, I mentioned the BRICS earlier, but I see many factors on the horizon, decentralization of currencies as the king dollar, its reign comes to an end. The rally in gold started when the markets began to anticipate the central bank would end its rate hiking and pivot toward rate cuts. The Fed gave markets exactly what they were looking for at the December FOMC meeting. The central bank didn't make any policy moves, but it released its dot plots indicating 3 rate cuts for 2024 with another 4 cuts in 2025. That would lower rates to between 2 and 2.5%. Jerome Powell raised rates faster than any time in history. I've gone over this many times, but we had interest rates in the teens in the late 70s going into 1980, and that was done by Paul Volcker, who was head of the Federal Reserve at the time. They did that because of the Nixon shock and because of inflation, and that was the way that they dealt with it. You just make it expensive to create new currency, because when you in a fiat currency system, whenever you borrow, whenever you swipe your card, whenever you get a home loan, that is new currency creation. So that increases the money supply, which therefore increases inflation. So when you raise rates, what you're trying to do is you're trying to shrink the money supply, because you're still dealing with fake, but there is, it's technically unlimited units. But if you've got a supply going in that economy called money velocity, and look, I don't even understand it completely. I just know the terminology and it makes sense in my head. But that's what the Fed was doing by raising rates faster than any time in history. This is Jerome Powell. They didn't get rates to the teens, but they made those rate hikes faster. And I think, there's a pivot here, but I think it really only has to do with the election year. There's going to be a lot of false hope placed on those rate cuts, and you're just looking, the markets are drooling in anticipation. Nevertheless, FOMC members must know that the economy built on borrowing and levered to the hilt can't survive in a higher interest rate environment. The central bank is easing out of the fight now with its fingers crossed, hoping it has done enough to tame inflation without crashing the economy. Mike Maharrey says, I call this wishful thinking. Ironically, financial conditions aren't all tight, despite the Fed raising rates from 0 to 5.5%, and Powell's claims that rates are now well into restrictive territory. They aren't. The Chicago Fed's own financial condition index confirms that as of the week ending December 22nd, the index stood at negative 0.54. A negative number indicates loose financial conditions. So while the Fed has tightened conditions enough to break a financial system buried in debt, it is far from tight enough to truly rein in inflation. Well, there's no good answer here, right? And they've done so much damage to not only the world's standing with the dollar and its usage, which takes away its supremacy, but the massive amount of debasement that has gone on from increasing the money supply. And this is before COVID 1984. This is going into the last quarter of 2019. You have 2 things going on in the last quarter of 2019. Very important to remember. You had the largest exodus in history of CEOs retiring with golden parachutes. They've not equaled that number since then. It was the largest exodus of CEOs in history. And quietly, I remember this is when I first started doing commentary on the David Knight Show. I remember they brought me in. I didn't even have a crew then. I was just me and my dog in San Antonio with my gold shop and my radio show. And I was noticing, I go, are we watching these numbers that the Federal Reserve is creating to prop up the overnight markets, the repo markets, over the overnights for liquidity, for the clearinghouses? They created, and it's estimated. I remember I took the report, I printed it, and I put it in my safe because I wanted, the number was so astronomical. I thought this can't even be real, but it was 6 trillion. It was 6 trillion in overnight currency creation to prop up that system. And that was global. That wasn't just the Fed doing that. That was central banks around the world. There was a problem. There's a problem with the entire world financial system. The United States has the oldest living fiat currency in the world right now. It's the oldest living fiat. Once Richard Nixon took us off the gold standard, August 15th, 1971, we became a free-floating fiat currency with no backing. We're the world's oldest living fiat currency. Every other currency is also fiat, by the way. But we're the oldest, and the average lifespan of a fiat currency is 26 years. There's 52 times more currency today than when I was born on Earth. These are staggering numbers, right? Yeah, in other words, a win over inflation means more inflation. But for now, perception is reality, and the perception is that everything is fine. Yeah, that's that normalcy bias. The Fed won the inflation fight with no collateral damage to the economy. Now we can go back to the easy money drug the markets crave. There will be no recession. Good times are here again. Because I agree that rate cuts are coming, and I think the Fed will have to go back to quantitative easing, but not because it beat inflation. In all likelihood, it will be desperately trying to prop up a crashing economy as the high interest rates finally pop the debt bubbles. But whether the Fed cuts rates because it thinks it beat inflation or because it is fighting a deep recession, it is equally bullish for gold. Consider this: gold has fared pretty well this year despite the headwinds, despite the strong dollar, despite the perception that higher for longer interest rates were bad for gold. If gold did as well as it did in an environment of raising rates and negative perception, imagine how much better it is going to do when rates are falling, especially if they're falling even as inflation is heating up again. That is a great synopsis too. People forget. Again, Jerome Powell raised rates faster than any time in history. Technically, and that the reason that the Federal Reserve is not buying gold is because buying gold increases especially in large quantities, increases the demand, increases the price, and the dollar's at war with gold. That is an open question. Why did gold not go down to $1,200 an ounce? Why did it not crash? Why wasn't there a massive sell-off in gold? Because the Federal Reserve, king dollar, was raising rates and therefore taking charge and decreasing the money supply and strengthening the dollar. Why didn't gold go down? Why in that environment, why did it hit its all-time high? That's because I think one factor he hit on already, it's central bank demand, because what's coming is the revaluation. Then he goes on to the January factor. As gold has plenty of momentum moving into the new year, and January is historically good for gold. According to data crunching by the World Gold Council, since 1971, gold has had an average return of 1.79% in January. That's nearly 3 times the long-term monthly average. Over the same period, gold has charted positive returns in January almost 60% of the time. Going back to 2000, gold has gained during 70% of Januaries. The World Gold Council points to 3 factors that may boost gold's January performance: beginning of the year portfolio rebalancing, season weakness in real yields, and gold restocking in East Asia ahead of the Lunar New Year. Past performance does not guarantee future results, and there are exceptions to this general trend. We saw negative returns in January 21 and 22, but as we move into 24, there appears to be a good setup for gold to have another strong January. Well, I think it will, just based off of headwinds coming out of 23. And again, record years, record gold buying by central banks. I was talking to David Knight, the Royal Mint out of England, they're up 7% gold orders over the previous year from the public. People are buying. Walmart selling out of gold By the way, don't buy your gold at Walmart. Call me and lock in a price. Don't go there and they're out of it, or they give limited bars and stuff. Call me. We'll compete. Same thing with Costco. Costco has the lowest price, and there's no gold. The people are trying to get gold, they keep selling out. You should call Wise Wolf. I can lock in a trade. You know, it doesn't even have to be there. Well, I agree with this analysis. I mean, you've got strong headwinds for gold, central bank buying, the Fed's going to have to cut rates. We're in an election year. The public's demand is up. It's everything. It's all the things, right? It's not just one factor driving the price of gold. It's many things. And I think what's really going to catch a lot of people off guard is the fact that we've had decade after decade of pretty much a stock market based, casino based, 401k, IRA, all that that has been centered in the American consciousness since the mid 70s. One of the reasons why we have these products now, these financial products, and everybody's involved in the stock market, was to get, in my opinion, was to get people to not pay attention so much that they can't save their money anymore. And that used to be the American dream was to buy a home. If you put a silver dollar in a coffee can and buried it or whatever, you could dig it back up. It'd still be $1 in 20 years. But that's not how things work. So in order for the system to continue without a revolt, without people, becoming skeptical of everything and paying attention, is to give them some returns. And you put them into a thing that constantly just keeps them grinding. And I look at the bubble, and it's an everything bubble, whether you're talking about commodities or whether you're talking about tech companies and FANG stocks and all that. Built into it is fake money. So eventually you're going to have what even the elites tell. I don't know why would you use this phraseology, Tony? It's a great reset. They're going to reset the whole thing. And that's why you should pay attention to what banksters do and not what they say. When the banksters around the world start hoarding gold, start buying massive quantities of it, they're not hoarding their own currencies. If your currency is magical and wonderful, why don't you just hoard that? Why don't you have a big stake in your own stuff? Well, you don't. It's like CEOs that own, they have they quietly sell off their stock when they know something's going to go belly up, or they see the long term and it's not looking well. The outlook isn't good. These are the tells. You watch what they're buying, right? Watch what they hold, not what they say. Which what they say is pretty much pure evil, because they want to put you in a central bank digital currency. And my goodness, are we going to talk about that this year for sure? Central bank digital currency, the satanic money system. Like it literally is the biggest threat to humanity so far in history. And we have to talk about that because they've got the white papers, they've got the plans, and they've got the political puppets to do it, but the game ain't over yet. All right, let's keep going into gold. I have to pick which story now. There was a story I want to get into on Zero Hedge too, and it's so much philosophy and it's fun. It's kind of the allegory of Plato's cave and Bitcoin ETFs. So I'll definitely see if I can. Let's do this one. I saw this is just another indicator. You kind of like Walmart or Costco getting into the gold business. I saw this one too. You're just going to see more and more of this stuff. Gold fever at Dubai airport amid record sales for its biggest retailer. The main duty-free retailer at the world's biggest international airport, Dubai International, has reported an all-new time revenue sales in 2023. And their items on demand for gold, from gold jewelry, all this is up. The biggest airport retailer operating in a single country was helped by a healthy demand for gold, from jewelry items to gold chains. Gold has become the Third biggest category for the retailer is mixed offer stores behind liquor. Perfumes took the top spot. In 2023, passenger demand for the precious metal led to sales of 773.5 million UAE dirhams, $212 million, contributing to 10% of total revenue. This is a big increase in the share since the pandemic. In 2019, gold was only ranked 8th as a product category, while last year's 10% share is the same as it is in 2022. Year over year, sales have risen 23.3% from 172 million. So I wanted to read, it's a little blurb, but I wanted to read that because I think this is in the public consciousness. And I was talking to David Knight about this. When you look at the factor in China, the Shanghai Exchange, first of all, China doesn't export gold. Their citizens buy it, their government buys it, their industries buy it, and it doesn't leave. They have 60 estimated, I don't know this for sure, it's estimated 60,000 gold mines in China. And I'm of the mind, by the way, and we'll explore this together this year, ladies and gents. I'm of the mind that China possibly holds, whether it's a combination of citizenry or government, or maybe just government, I think China may actually hold more physical gold than the United States, because we haven't been a net buyer. We haven't been a buyer since the 1950s. And I think there's an open question on our holdings. We're supposed to have about, I think, 8,500 tons, something like that. And that was what, when the end of World War II at the Bretton Woods system, Bretton Woods, New Hampshire, 1944, we set up the new economic world order. That's where you get the IMF and the World Bank, and the dollars pegged to gold, $35 an ounce, since the world's reserve currency. We haven't bought anything since then. We had 50% of the world's wealth, and we were 5% of the world's population. It was a massive setup. And for the baby boomers and everything that came in, it's been squandered since then. And we're now on a free floating fiat currency debt system. But that's the way it was, and we had a massive, supposedly massive gold holdings. And I think that maybe have been eclipsed. China has been buying gold. If you look at there was an article up on Kitco, and one of the researchers, I think I agree with his findings. This is something, looking at the total numbers and doing the calculations. Why would a country otherwise buy gold off the books? Why wouldn't they want you to know? They didn't want to be put into any sort of competition. So they bought stealthily through the beginning of the century up until now. I think it was the end of 2022 going in, there was this massive gold buy as well. And it was also anonymous. And then one of the Zero Hedge reporters uncovered it. It was actually China. I think it was like 16 tons or something. But that's been the trend. So something's afoot here, and I would pay attention to that. That's one of the things you won't hear on CNBC. They're not even factoring in gold holdings. I am, part of the secular golden rule, which is he who has the gold makes the rules. I don't like that rule, by the way. Matter of fact, I put out in my membership program for kids on Wolf Cub, part of the Wolf Pack program. It's $35 a month, by the way. I put out a letter or a little message from Wise Wolf to the Wolf Cubs, and one of them was respecting the actual golden rule, which is treat others as you want to be treated. I respect that more. But let's talk about reality. On this planet, with greed and all the other things that accumulate in our lives that we want to push away, that make this life make this world a dark place. That is something we have to pay attention to, is who holds the wealth. All right. So full disclosure too, there's almost nothing for me to report almost ever on silver. I mean, I can go around the Twitter sphere and I can get into the back corners of things. You always see price predictions and stuff. We don't talk enough about silver. I'm going to have some authors on this year as well. That some books I've already requested to get some people on. I want to dive into that. I'm a silver guy. I know we talk about gold. It really sets the table, but you don't find a lot of great articles on silver much. I mean, every once in a while we'll get one popping up, and it's usually kind of what I already tell you, which supply is not what it seems. There's an opportunity for if there was a whale to come in, they could corner the silver market. It's extremely cheap. It makes no sense. Silver was $52.50 an ounce in 1980. Show me what $52.50 of $1980 will buy you today. You're talking about $200 to $300 worth of value. There's something wrong with the price of silver. Everybody knows it. The world's largest holder of silver is JP Morgan, physical silver, not ETFs. That's the difference, right? It's an open question. Do the elites and those who hold the silver, are they artificially keeping the price down for accumulation? I tend to think that it is. It's quiet accumulation. You should really pay attention to that. I think there's, if I could fill just about any order, but I say just about. And it's a unspoken rule among gold dealers and brokers and precious metals dealers, you can't always source silver. So if you can't always source, how can you have an arbitrary price? How can you have a price in the below $30 when I know that if I place enough and if I get a bigger buyer, that we're talking weeks out to fulfill it? So that doesn't make any sense. And I think, it'd take about 5 minutes of research and it won't make any sense to you either. But we will have some stories on silver. I didn't want anybody to think I'm ignoring it. It's just extremely cheap. It's stupid. It's so cheap. The gold silver ratio is skewed. We're going to talk about the history of that. It takes about 87 ounces of silver to make 1 ounce of gold. That was dumb. Like, that's not even geologically sound. It's 17 to 1 in the earth, supposedly. It's at most 20 to 1 at most. And I think during the first part of COVID 1984, it was in that first quarter of 2020, it was 125 ounces to 1. So just stupid, right? All right. Let's get into some news on crypto. And I don't see any. I'll make sure I'll go to the Rockfin chat really quick, just to say hi to everybody. Thanks for being over there in the Rockfin chat. This on the America Unplugged channel, ROKFIN.com. You'll find the Wise Wolf Gold and Crypto Show, Arterburn Radio transmission, America Unplugged. I see Free Thinker, Patrick S., Matthew Henry. Yeah, Matthew Henry says, Tony, I don't know what you're talking about. Don't you know everything is awesome? Yeah, everything is awesome. Well, I mean, every day that we're above ground, we're doing pretty good. I don't know about the financial system, though. I'm color me skeptical, Matthew, but I know I appreciate your sarcasm. It's good to see it. Max B is in the chat, so thanks for being over there. We've got this show every Monday. It's live, and it's just to go over the markets and the monetary system, currency, current events, politics, precious metals, Bitcoin and banksters, all that good stuff. And we try to get that done within the hour. All right, let's go jump into. I want to get this article on the Plato's cave allegory and the Bitcoin ETF. I want to discuss this. It had some really great points. Let me stop this screen and start another one. This is just good history. This is just fun. These are the kind of articles that I like. I don't know. It's my wheelhouse. You got philosophy, you got finance, you got new systems, and then the argument of finite versus unlimited. I like all this stuff. This is Zero Hedge, authored by Mark Jeftovic of thebombthrower.com. And it's Plato's allegory of the Bitcoin ETFs. Lump investors are trapped within a system they believe is real. Probably everybody reading this is familiar with the Plato's allegory of the cave. Well, I hope so. Those who aren't may recognize in many of its contemporary variations seminal blockbusters like The Matrix or lesser-known cult classics such as Dark City, even the mimetic thought construct of the simulation hypothesis. They are all expressing the same concept, that what we think is the real world actually isn't. It's just a flattened projection of reality. The common folk are like prisoners chained in a cave, where in observed events are largely acts of puppetry, choreographed from behind their field of vision. In Plato's allegory, the manufactured existence is quite literally the projection of shadows. What is taken for reality are really just images on a wall, a screen, if you will. Behind the captives, if one could make their way out of the cave, they could perceive reality for what it is in the splendor of the full light of day. Well, this is, I describe this all the time, where, the prisoner escapes, goes out into the wider world, sees the sun, and comes back in and can no longer identify the shadows on the wall and the puppetry. And he is an outcast. He's like, there's something else. You've got to see this. But he's no longer relevant. That is the Twilight Zone ending of the Plato's allegory of the cave. The philosopher goes on to describe the difficulties an escapee would have if they were to re-enter the cave and try to explain to those who are still captives what reality is really like. The allegory is timeless to open up never-ending interpretation, but one thing it takes aim at is a key observation which society increasingly loses sight of. The depictions of truth, renderings of them, even reasonable facsimiles thereof, are not reality. The map is not the territory. Oh, I love that phrase too. The map is not the territory. The thing that depicts and the thing depicted is not the thing itself. In fact, the latter may be missing an entire dimension of truth that rendered it a muted, faded simulacrum of what is real. I've always drawn attention to how the images on the cave wall were two-dimensional, and that the difficulty to the returning escapee would be in explaining reality is that trying to explain what is 3D, what is real. And this, he goes on to say, the cave is the fiat banking system. I love this. This is fun. Inside the monetary cave, what passes for reality are just projections. They're spreadsheet models and financialized derivatives of rehypothecated paper assets. Through these constructs, financial institutions can create renderings of assets which they claim are economically identical to the real thing. That phrase, economically identical, was proffered as an objection to my article of several years ago about Bitcoin future ETFs and why you shouldn't buy them. In the fiat cave, a synthetic derivative that is more or less correlated with the price action of an underlying asset is the same thing as the underlying asset. You see, it's the passing off. You go into what a derivative is. Like depends on what the definition of is, but what a derivative actually is, well, it's like a mimicking or the distillation of a thing, but not the thing itself. The mindset is so baked in, it's part of our zeitgeist. Other fields like artificial intelligence have glommed onto it. If an AI can demonstrate behavior just like human intelligence, then AI is intelligent. Neither proposition is true. A piece of code that can pass as a tuning test is not sentient. It's just code. And having a derivative is not the same as owning the underlying. And if the recent David Rogers web book, The Great Taking, is right about anything, which I have reviewed here, is the same as the asset. Bitcoin ETFs are not Bitcoin. The anticipation around the coming Bitcoin ETF in the US is euphoric. He says, we've had them in Canada for years, and they're actually better than the ones coming in the US, as we'll note below. They've made believers out of skeptics. They've proved Bitcoin is an unstoppable force. In my article about Bitcoin future ETFs, I listed 4 reasons not to own them. 1, counterparty risk. Number 2, dilution. Number 3, decay. Number 4, divergence from the spot price. While the spot ETFs will, in theory, obviate reasons 2 through 4, the number 1 reason, counterparty risk, still looms large. That's so true. Any of this stuff, and I'm very much into the gold and silver aspect of where we're headed financially because of the lack of counterparty. When you hold it in your hand, counterparty risk plummets. You've got it, you own it. Whereas you go into something like a spot ETF, which could it be good for the crypto space? Is it going to drive purchases and therefore drive price? Probably, it'll do some of those things. But again, you're still not holding Bitcoin, which the whole point of Bitcoin was for you. It's so easy to own. It's so easy to have your own wallet. And I think we're always waiting for the fiat currency system to come in and make something legitimate when they should be asking us, not the other way around. The spot ETFs have their own challenges. If there's a hard fork, say this ordinals and inscriptions business and the BRC 220 craze leads to one, the ETFs will apparently be forced to choose which fork to follow, and they may choose wrong. Make no mistake, Bitcoin ETFs, whether they're spot or futures, while sure to open the floodgates to institutional enthusiasm for Bitcoin, is best left for institutions, funds, and endowments, all of which would still be better off holding BTC directly. There is one advantage that the spot ETFs have over the futures, and it's a big one. They'll provide a pathway to holding long-term positions that won't get chewed by decay, at least not beyond the management fees. Buying into these ETFs won't make the lump investor into a hodler, not by a long shot. No, it's funny. I saw this first when I was looking at somebody had bought, was it the Robinhood app? And maybe it's changed. But I said, how much Bitcoin do you have? And I think it was a few thousand. And I said, well, you ought to move that onto your wallet. And I didn't know at the time. I had been buying Bitcoin for years. I had, relationship with exchanges and stuff. And they said, oh, well, I can't move it. And I thought, what do you mean you can't? You can't move your own BTC? No, because you don't really own it. It kind of defeats the whole purpose of Bitcoin. You should have your own wallet, decentralized, have your 12 phrases. We'll do a class on that for the podcast too. I need to get some crypto people on here. And right now, when I say crypto, I mean I follow pretty much everything, but I'm just a Bitcoin maximalist at this point. Not for any sort of ideological reasons. I'm just waiting for, I'm waiting for something to happen in the space for other coins. I own other coins, and we'll talk about some of them. I'll have some people on. But right now, I'm definitely not telling you to go buy any other coins. You should learn the space and do your own research. We're not going to make any recommendation on coins. And this is the extra dimension of Bitcoin is math. Those who have been in Bitcoin before now got there because they had left the cave. We left the cave because of math. Oh, I agree with that. The math that says, among other things, that we're in a debt bubble that can never pay off or even be meaningfully reduced. Our currency is backed by nothing, and it actually steals from people with every new unit printed. That's exactly what it is. It's theft. It's the hidden taxation. It's a crime. They rob people of value, never explaining this. fixed income people. What happened to all those folks? When they did the massive PPP money, you're talking 80% of all the dollars created in the history of this country, 80% were created in the last 48 months or so. Absolutely criminal. We can't stop expanding either bubble, money supply and debt, because if either contracts, it will crash the global financial system. Remember when I told you we're the world's oldest living fiat currency, every other currency followed. 52 times more currency today than there was in 1980. 52 times more currency on earth. How much devaluation? By the way, when I say we're the oldest living, there's been other fiat currencies that disappeared in between that time. You only need to look to history. And we use a specialized area of math, public key cryptography, to assert property rights in the real world. He goes on to say, Bitcoin is specialized expression of mathematics secured by energy. Private keys can be represented in a memorable seed phrase. I've used this. These are all things that work. The Bitcoin protocol is implemented through zero trust mechanisms. Any alteration to the protocol, such as the 21M hard cap, would create a fork, a challenger, rather than change Bitcoin. In a cave world, this all sounds cray-cray to the inmates. Hard money secured by energy, they scoff. You mean tulips backed by nothing? It's funny that people always try to put the tulip mania, that was I remember learning about this, watching, this is back 2008 or 9, when Oliver Stone's Wall Street Money Never Sleeps came out, and he had just this framed picture of the tulip and tulip mania. This is something that happened to the Dutch. I want to say it was like around the 16th century or so. And, the tulip bulb was used as currency because it was so rare. Well, they just made a bunch more of them, and then the whole thing came crashing down because, it becomes ubiquitous. It's not so rare, doesn't carry the same value. And, they can easily just grow them, and so somebody found a way around it. That's not what Bitcoin is. Bitcoin can't be created infinitum. Like, there's not more units of them. There's only 21 million Bitcoin that will ever be mined. And this, gold and silver are very similar. They're finite. We know that they're a finite resource. You could argue about crude oil and other things that may be a natural occurrence, or it may be replenishing itself. But gold and silver certainly don't, unless you're talking about millions upon millions of years. And I don't even know then. Geologically, I'm not an expert. But it takes so much work and energy to get them that even it's comparable. It's finite. We don't know the number. But Bitcoin's even harder than that, because on the ledger, we know that there's only 21 million. So tulip mania has no bearing whatsoever in the real world. Let me see if I can get just a little bit more out of this article. Yeah, we can't fault them for this. It's kind of an institutionalized Stockholm syndrome. They've never done the work to peer outside the cave. As I type this, Bitcoin is still under $1 trillion in total market cap, and I think it would be interesting to watch going forward will be the ratio total of the, and this is, again, it's talking about the Bitcoin ETFs to ratio against the overall market cap. Well, it's good article. I like the juxtaposing it to Plato's cave. That so much can be said in that realm when it comes to how we're looking at the monetary system and what's happening, and why gold and why cryptocurrency are so important. You're talking about massive historical shifts that have not been seen so far in our lifetime, in generations. At the end of World War II, you had the Bretton Woods system. I know I say this a lot, but it's worth repeating. That was a new economic world order out of the ashes of World War II. and the victors, were assembling a new financial system. That was, coming up. It's 80 years ago. It is 80 years ago. That's a fourth turning. That's a saccharum, what the Romans called. So every 80 years or so, you have a massive turning of all institutions, history, and cycles. I believe in the cyclic theory of history. I also believe in the conspiracy theory of history because that's where all the scholarship is. But if you look at those cycles, and so we're right at it, folks. We're in a fourth turning. So when you put those things together and you see that institutions losing their credibility, and look at what's happening to the Federal Reserve. This isn't your father's or grandfather's stock market. They're not even talking about profit anymore. It's talking about ESG. So I'm looking around for what's real. I mean, people are craving that, right? I mean, it's instinctual. And I think that's why you're seeing so many like the Dubai airports and just average people, the Shanghai Exchange, everybody's trying to get gold or they're getting into cryptocurrency. I think you should look in. I don't recommend cryptos, but the reason I put it as part of the show and why I deal with it in my brokerage is because it's absolutely pivotal that we as human beings start realizing that the system that we are under, it's built to serve just a few. They're going to pull their ripcord. They're going to have their golden parachutes. Don't get trapped in the normalcy bias that, tomorrow will be like today because it was like yesterday. That's not how any of this works. I've got to defeat that in myself. So this reason it's good for me to go live and do the show because I have to remind myself not to be so caught up in the normalcy bias. All right. One last article real quick, man. I just was an afterthought, but I wanted to read a little bit. Let's see if I could I'll try to cut it down. All right, let's put this up on the screen. This was what I was talking about earlier with the economics of the gold, Russian ruble, and what happened, the blowbacks after the sanctions. This is up on LewRockwell.com. Let's put this up here. This was an interesting piece, and I will get these in the show notes as well. We'll start having making sure that the Wise Wolf Gold and Crypto show has a lot better show notes. But we all know what happened, after the sanctions on Russia. And let me see if I can get through this really quick. The sanctions imposed against Russia. Let me do this. Let me give attribution. Insight into Russia's view on gold. And this is Alasdair Macleod. It's their Substack. And again, LewRockwell.com. I always kick myself if I don't give some attribution. The sanctions imposed against Russia boomeranged on the Western economy. The geopolitical instability they provoked, rising prices for energy and other resources, inflation, negative factors put strong pressure on the global economy, in particular the global financial market. In 2023, all these circumstances will objectively affect the change in the stereotypes of investment policy in the world, from risky investments and complex financial instruments to invest in traditional assets, primarily in gold. According to Saxo Bank analyst, in 2023, increased demand for this metal will lead to its price rising to $3,000. As a result, there is a real opportunity in the very near future to significantly increase reserves due to increase in physical volumes of gold and revaluation of its value. What this author is talking about, by the way, is a new financial system for Russia and the gold-backed ruble. Large gold reserves allow Russia to pursue a sovereign financial policy and minimize dependence on external lenders. The amount of reserve affects the country's reputation, its credit rating, and investment attractiveness. Large reserves allow you to plan the state budget for a long time, buying off many economic and political risks. In 1998, the lack of sufficient international reserves became one of the causes of the crisis, which ended in default for Russia. Now, and he's talking about Russia, now our country already has large gold and foreign exchange reserves, being fifth in the world after China, Japan, Switzerland, and India. and ahead of the United States. Yeah, there's a reason these countries are moving away from the dollar system, the SWIFT system. You know, these alliances like Brazil, Russia, India, China, South Africa. I'm telling you, this is the stuff to watch. And I'm running out of time too. Over the past 20 years, gold mining in Russia has almost doubled, while in the United States, it has almost decreased by half. By dismantling real wealth, the United States has lost its competence and interest in the production and processing of strategic resources, gold and uranium, etc. The printing press funds the purchase of everything they want. Gold production, which today barely occupies 1% of Russia's GDP, may well grow due to the growth of production and relative oil prices. And that's all I can do on that article. But there was a lot in here. It really talked about the ruble system after World War II, that the Soviets had signed the Bretton Woods Agreement, but they didn't ratify it. They went to a free-floating currency in 1961 with Khrushchev, had dire consequences. They came back to gold. And, for a second time, now this is going to be the ruble 3.0. Stuff to watch, folks, especially when you see those sanctions the way that they were, and the whole point of them, what was supposed to come down after Russia invaded Ukraine. All right, so much to cover. We'll be back next week for sure. Watch the podcast channel for the Wise Wolf Gold and Crypto Show. I know if you subscribe to me in other places, please go subscribe to the actual podcast, because there's going to be interviews put up there, even short snippets. If I find an article I really want to read, I'll just go and read it and upload it to the channel. So please do that. It's going to be a crazy year, 2024. There's geopolitical upheaval, financial, internal, sociological, everything, folks. It's the everything bubble. And I'm glad that you're here. It really means a lot to us. We're sponsored by Wise Wolf Gold and Silver, obviously, and we have a membership program. I put Wolfpack together because I got tired of watching the same ads from these 1-800 number gold companies that really just trying to target people with 10,000 and 20,000 and 50,000. I was the same, guy starting out. I bought my first gold coin when I was 22. And I wasn't treated very well, and I didn't know what I was doing, and the guy knew it. We don't do that. You go to wolfpack.gold or anywhere, wisewolfgoldandsilver.com, and you can find a link to it. We have a membership program starting at $50 a month on the Lone Wolf program, and we will send you a detailed invoice. We'll buy your metals for you. We get you in the game and get you learning, teach you about it, and we have direct buy-in opportunities, all sorts of deals. Go to wolfpack.gold, support the show. We really appreciate you. I'm going to sign off now. We're going to head back up to the Branson location. I'll see you guys next week for sure. Okay. Take care of each other. Remember, in a world of bulls and bears, be the wolf.